Okay, here we go. It is time to discover, or it is time to talk about the one big signal that we're looking for that could happen as soon as today for, well, essentially indicating a major reversal in this market. Now, with that said, I want to be very diabolically clear. What is Bitcoin operating right now? It's operating in a lower high fashion. We do have a descending triangle on the board, and this is a bearish redistribution pattern, which has a higher probability to break out to the downside than the upside. However, how would you confirm an actual breakout to the downside? The same thing that we're looking at for almost 2 weeks now. Need to see a closure below 46,500, even on a 4-hour would very likely do it. And if you do want to be a little more aggressive, which I think would maybe be appropriate within this region, then I would just be looking for a wick below actually yesterday's low, as we do have one of these babies going on right there. So any sort of any sort of move below yesterday's low is obviously going to be quite compelling. Of course, a closure on a 4-hour, if you want to be super conservative, a 12-hour is going to be most appropriate in this case. And yes, targets, or there would be a technical target all the way down to about $43,000. So anywhere around $43,000 to $44,000 where I'd be looking for. That would also be in line with the weekly 55 exponential moving average right here, which Bitcoin is, starting to find some lows at. And if you are on the program, you do know that this is the crown cross strategy right here. And I do like to look for my higher lows within the context of a long-term, within the context of a long-term trend in this case, which does still, look okay. So with that in mind, coming back down to that region wouldn't be, a death sentence or anything like that. However, I want to go back onto this over here and talk about what I'd be looking for on a reversal, because I do still think that there are several things within the underlying market dynamics and one major signal that could be printed as soon as today that we've been waiting on that would indicate, well, exactly that essentially. So first and foremost, if you're going off price action right here, where's our last lower high? Well, technically speaking, we're putting in one right now at about 49,000 and some odd change. But I do think that in this case, because it is such a big interpretation, I would still be waiting for the last lower high that we saw on 12th of December right here. So either a wick higher than that one, or especially a closing higher high on a 4-hour, which would be anywhere above about 50,000 and about 300, let's say, would resolve that and would indicate a bit of a bear trap going on right here with targets immediately back up to about $52,000. Yes, very likely does play out a short-term pullback from that region. However, I would be looking for extension to $54,000, and that's the big bad level. Why is it the big bad level? Well, first and foremost, we do see that it is our last structural breakdown from October and November consolidations right here, and also the 0.5 Fibonacci retracement right around $54,000. So as long as Bitcoin's below there, it is still pressure on. We still do have, major lower highs on the daily and below, and well, Bitcoin would be in a bit of a precarious place. However, let's go to this chart over here, and I want to talk about this signal yet again. This is going to be the daily stochastic momentum on the CME chart specifically, not on spot price action, but on CME. And what do you know? We're going to have a chance to close and cross the upside today with any sort of a closure above 47,300. Remember that number. If you do see CME close above that level today within the next 15 hours, 53 minutes, and 35 seconds, then we will see that officially turn to the upside. We'll have a very similar signature to what we've seen many times in Bitcoin's past. However, there are two specific signatures that have been offering, a much more interesting long-term view on this asset. So first and foremost, let me explain this chart. All of these vertical blue lines represent the same area on price action. That is when the daily stochastic has gotten down to this green horizontal bar down here. And as you can see, all of them do correlate with some pretty impressive bounces, even within the context of pretty nasty weekly downtrend macro bearish markets, which right now Bitcoin does not have a weekly downtrend. As long as Bitcoin's above $40,000, we still do have, or Bitcoin more importantly, still does have both higher highs and higher lows. And right now, not only do we still have higher lows, but we do also have higher highs. I mean, Bitcoin has not put in a lower high just yet, but obviously you need to get a lower low first before you do put in a lower high. So the order of operations, probably going to take its time. Anyways, I'm getting way ahead of myself. So I just want to call out that even in the most bearish of bearish markets that we saw in 2018, these signals were met with, some pretty impressive price action. For example, this one over here, given about 50% or a little bit more than 50% to the upside. Yes, it was a failed attempt, but ultimately very tradable if you do ask my opinion. Now, there are a couple examples right here that stand out amongst the other ones that are very similar to what we're looking at right now on Bitcoin. That would be this one over here in March 2020, and then that would be this one over here from December 2018 lows at 3,100. What is that, might you be asking? Well, we do see this very similar signature right here on that horizontal green bar, where first the daily stochastic comes down to it, bounces, rejects, comes back, bases again, and then boom, off to the races with real confirmation back above the critical zone right here. That was your March 2020 dump, which Bitcoin did, well, essentially put in a macro macro low there, never testing it again. And that was, of course, the last flu dump. The time before that was December 2018 on the $3,100 lows. And that one's in even more similar to the one that we have going on right now, where you get test 1, bounce, rejection, test 2, bounce, rejection immediately, and then test 3 and off to the fucking races. And of course, if I do bring out our old formations that we're looking at within these regions, we had an ascending triangle right here, and we had an ascending triangle right here. That's, again, your December 2018 3100 macro cycle low, or at least I would assume so thus far, but I think that that's pretty, well, if we'll just leave it right there. And then, of course, the flu dump over here, same thing, right? Anyways, if we go over to our current formation, what are we working on? Well, as long as $40,000 does hold, we do have an ascending triangle. Oh, that looks rather simple, or sorry, similar to what we had on over here and over here, by the way, on a much greater scale. And also, if we go into the actual momentum oscillator, this signature right here specifically is much more similar to what we saw on the macro low at 3,100. If we do essentially see this cross back onto the upside, and more importantly, or just as importantly, I would say, get back above the critical zone at the 20 read right here. Again, that will be met with any sort of a closure today above 47,300, at least for across the upside yet again, which right now it is down actually. So keep that number in mind, because that is going to come to, or that is going to very likely be a big one going onwards and forwards from here. And then the $54,000 level is the big one, at least in my opinion, for looking at Bitcoin in like a more strong posturing, very likely to beget continuation up to $57,000 or $59,000. And then if you're the most conservative trader of all time, which fair enough, you know, there is a lot of merit to that, especially on the very high term timeframes, you're probably waiting for $59,000 in order to look at this market as reversed, put in another major low, and long-term trend continuation right here. Of course, there are a few things in the underlying market dynamics that do essentially agree with this as well. That would be one over here. If we go into the market data tab, we can go look at the fear and greed index. Obviously, the fear and greed index is right now at a 28, which is very, very similar to what we saw back on over in the last major low on the weekly for the $40,000 level in late September, where Bitcoin spent about 2 weeks within the fearful zone. By the way, right now, not only have we gotten even more fearful than that time, but we stayed in there for longer, about almost 3 weeks now. This is starting to become a lot more comparable with what we saw on the last macro low at $30,000 over the summer, which took about 2 to 2.5 months whilst being in the very fearful zone right here. So this is more of a setup kind of akin to that. On top of that, if we go back onto the first data tab, you will notice that the global friendly rates have been trending down. If it populates, there it goes. Yes, it's there. Has been trending down ever since October. And more importantly, we are basically just below parity right now. We even saw slightly negative rates yesterday, and the day prior than that, I think, was basically zero, which, by the way, what did we see on September? We saw on September that we had just about the same sort of reads right here. Very, 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 very ever so slightly negative. Again, on our major dump, we saw it go all the way to negative 0.036%, by the way, on an average. And back on over in September, we actually got all the way to, I think, about that same level, in fact, and then kind of hovered just below 0%. And of course, that is, in line with that. On top of that, the Bitcoin exchange reserves continues to dwindle, and we do see another 10,000 net outflow of Bitcoins from exchanges to, I guess, hot, wallets, cold wallets in this case. And that is actually verified as cold wallets, not just like internal exchange transfers. And you can even see, and it really becomes a lot more interesting over here when you do look at the open interest versus the leverage ratio. The open interest barely even ticked up, and the leverage ratio ticked up a lot. So there really is a lot of illiquid supply right now, which is interesting. And it does offer up a very interesting dynamic, especially if Bitcoin can reclaim these more important levels, of course. So with all of that said, I want to go over one last thing over here. This is something that I spoke a lot about a month ago right here, and that is just the relevancy of the 20th of the month. Like the third Friday of every month does seem to offer up, a lot of edge just for major reversals within the market, basing upon major highs and major lows, essentially. Why is that? Well, my theory is because, and this is coming from traditional markets, but basically the third Friday of every month is like a major options expiration. It's called regular expirations. In fact, years and years ago, there was actually only that expiration for options. Now they have it like weeklies and probably even dailies by this point. I don't even keep up with it. Anyways, it's a big one because a lot of big asset money managers are rebalancing around that time. And now we're not just coming into the third Friday of the month, but we're also coming into the quarterly, which is an even bigger one. And that is really where you do see a lot of major reversals in all markets, actually, just for what it's worth, in case you happen to give a fuck. But if you look at this over here, just around the 20th of every month, give or take about a day or two, let's say, we do see some pretty impressive highs and lows. For example, this one over here was our last high before, well, just shredding down about $20,000 almost. Of course, this one over here, major high, of course, before going all the way from 67 down to 57, 58, so almost $10,000 move right there. Same thing on this one over here. This was, of course, our last major low on the weekly at $40,000. We did put it on the 21st of September, actually, and then this one over here, another major low before going $10,000 to the upside. This one over here, obviously your July bear trap before going like $20,000 to the upside as well, a little bit more than that. This one over here, another major low before going up about $10,000 from 28 or 29 to 37 or so. And of course, this one over here was your May lows on the 19th, actually, before going up about $12,000. And that actually technically was the macro low on that one, because we did not trade lower than that wick low, nor close below it, more importantly as well. Of course, this one over here, another major low on the in late April. This one over here, another around the major high in March. This one over here, your major high in February. This one over here, major low in January, all around the 20th, give or take a day or two from that number. So that is rather interesting going over the past year here. And I do think that holds a little bit of weight. Just, if not for anything else, just an interesting sort of thing with price action. On top of that, if you do want to play the old moons, we got a Bula moon coming in a couple days here as well, I think. So fair enough. If you believe in the moons, you can see them outside, then perhaps that is also the savior. And then more importantly, or perhaps just as importantly, I would say, Bitcoin on this current low is, well, within the concept of descending triangle. That's exactly what we had back on over here. So if you're matching up all the different things, we have the same formation. We have the daily stochastic possible. That is not confirmed just yet. That would be the big signal that I'm looking for, essentially, to kind of look at something relatively, maybe not exactly like this, but something resembling some good upside momentum. And then on top of that, we do have so we do have the underlying market dynamics with the fear and greed index at the same levels. We see the financing at similar levels as well. We see the open interest also coming down significantly to those similar levels that we saw in September on this low over here. And by the way, you could just kind of draw a regression between all of the lows going in from May lows at 30,000 to September lows to our lows right here thus far. And on top of that, we did have the day of the month, plus, if you believe in the moon cycles, well, the moon cycles as well. At the end of the day, though, the main signal that I'm looking for is that daily stochastic signal. And then also, most importantly, this one supersedes everything else by far, and it's not even fucking close. Bitcoin needs to trade above its last lower high. And I'm not talking about the one that we're putting in right now. I'm talking about this one right here. Below, again, 46,500, I am bearish. I have to be, and I look for the technical target somewhere around $43,000 to $44,000 to play out. And then, could Bitcoin do something like this and play at the old LARP lines? Maybe. Possible. Definitely possible. But I'd want to see it in real time first. So until Bitcoin basically does something like this and comes back above this level, it is still pressure on, and technically speaking, it is still a bearish setup by far. You can't fight price action, obviously. But all of those things considered, I do think offer up a bit of an edge, and I do think are worth knowing, and I do think will get resolved very likely today, and I think at latest tomorrow. We're seeing the etchings of this move already begin off the back of the FOMC meeting yesterday, of which the sort of take that the Fed had was a little bit less stringent than what the expectation was. So that does allow for, presumably at this time, and of course this will be an ongoing narrative, but at this time that does kind of allow for markets to kind of continue doing what they've been doing for maybe another 2 to 3 months or so. And then, well, assuming that nothing drastic happens, then we got problems on the other side. Anyways, that'll do it for right there, and hopefully that was helpful, and there you go.